Hey guys, Mark Hart here. I want to share with you why Memphis is now an appreciation market in addition to a cash flow market. You're going to think I'm crazy, but let's dive in. All right. So Memphis market has always been a cash flow driven town. We have had really high rents, low sales prices, our property taxes around 1.1, low insurance costs, and you put all that together on a pro forma, and you're able to get some consistent cash flow on a reliable basis, even after taking into account vacancy reserves and maintenance reserves and paying all of your expenses. So that's why people have come to Memphis for that cash flow. But what we're really pleasantly surprised with is that we've seen some consistent appreciation in the last few years. So here are the numbers. For the last 30 years, the Memphis market has appreciated at 2.49% year over year. So that's consistent, steady, slow, boring, but also reliable. And that's the Memphis market. We're a linear market. We're not cyclical. So you're not going to see the boom, which is going to succumb to a bust, and that bust could cause a foreclosure. We're just slow, steady, consistent growth. I mean, even with COVID going on right now, we're the third least impacted market in the entire United States of America from COVID. So staying linear, slow, steady growth. That 2.5% appreciation is what we put on all of our pro formas. But now we've actually been ramping up. For the last 10 years, our appreciation has been 3%, which is exciting, but it gets even better because since 2016, we've been appreciating at just under 5% year over year. So that's incredible, 5% growth. You know, we don't want 10% plus like the San Franciscos of the world, because that's too much. That's not sustainable. The income growth and the rent growth are not going to be comparable to that. So many economists say that the 5% appreciation rate is actually ideal. So I hope our appreciation stays there. But you never know. We'll see. So some of the reasons why we've been appreciating now at that 5% mark have a lot to do with our economy and our location. So since we are the distribution center for North America, as you know, there's a massive boom right now with e-commerce because of COVID going on. People can't go to a brick and mortar store, or they don't want to go to a brick and mortar store because they're at home on lockdown. So even with that, people are still going to buy goods. They're still going to need to get toilet paper, paper towels. And so people are now buying those items online and shipping them to their house. So there's a massive boom right now for distribution centers to be built as with the rise of Amazon. So we in the Memphis market are the #1 fastest growing industrial market in the entire United States of America. So they're just building distribution centers on distribution centers, and all of those employers are going to be hiring people that are predominantly going to be tenants for our rental properties. So what we're really excited about is the math behind the appreciation, because since most of our investors are going to be putting 20% down, a 5% appreciation is not a 5% return on your investment. It would be if you paid cash for the property, but since most of our investors get a loan, put 20% down, let's do some math together. So let's assume you buy a house for $100,000 and that property appreciates at 5%, or just did last year, 5%. So that's $5,000 in equity, or $5,000 your net worth just grew. So you put 20% down plus closing costs. So that's about $25,000 in total to buy that property. So you got $5,000 in equity, but you only put $25,000 to get the property. So 5,000 divided by 25,000, that's a 20% return on your investment in 1 year. And that's actual data. That's what our investors have been receiving year over year since 2016, and 3% from 16 all the way back to 2010. So that is incredible. You throw on that 20% ROI from appreciation, plus the cash flow that we're giving, plus the principal pay down, which if you average the principal pay down out over the 30 years, that's a 13.3% return on your investment year over year. Average, of course. And so this is why this single family home investing is really just gaining a lot of traction, a lot of popularity. That's why a lot of big hedge funds like Blackstone Group have come in and are just getting thousands and tens of thousands of houses all over the country. And so I hope you guys like that. The Memphis market has been doing absolutely incredible. Our rental demand, our cash flow, and our appreciation now as well. So if you want some more information, please reach out to me. More details will be below in the video. And please make sure you hit the subscribe button and let us know what your guys' thoughts are and how we can help. Thanks so much.